Hello, everyone. Welcome back to the Wealth Stackers community call. Today, I'm going to start talking about everything I've been learning since building Stack. It goes all the way back to 2021. And I think it's important to understand because right now, the prices just fell. And this is normal. It happens, but I'm going to take you through the years and walk you through what has happened in the past. That doesn't mean it's going to happen in the future. And again, none of this is financial advice, but the truth is, once you understand this stuff, you know how to take better advantage of all of it. So I'm going to start by sharing my screen and showing you a presentation. Okay. So my learnings from building Stack. Um, like I said, it's been a while, but it all starts out with me deciding to become financially literate and learning more about investing in the stock market, real estate, reading books on real estate, reading books on stocks. And so I started to really start to understand the stock market from the very beginning. And where that started was in the 1900s. It's not even that long ago that the stock market began. Well, it's 100 years ago now. Wow. So yeah, it's about 100 years ago. And if you look at what has happened within that time, started out pretty good, then a major crash. This is around the time of the Great Depression. Major crash. Ever since then, pretty steadily up for, I guess, let's say if this is the 32 or 33, about 90 years, 80 years. Yeah, well, no, 90 years. So this is where I look at it and you see the ups and you see the downs, you see the ups and you see the downs, you see the ups and you see the downs. And where do you think most of the money's made in this time? It's on the downs. If you were investing on the downs, you would make a lot of money over a long period of time. No matter where you were in history, if you invested on the downs, you would be rich, right? But what they did was there was a study they did where, and I'll find the video, I think it's in the community videos, where a person calculated what would happen if you just invested on the height every time as well. You would also be rich. The problem is it would have taken you longer, right? Because if you bought right here and you it fell, you would have had to wait till all the way over here to get make a lot of money. So this is 20 years, you know? And if during those 20 years you were dollar cost averaging and buying in all down in these areas, when this happened, you would have been really rich. And that's the lesson that I learned in reading about stock market and everything. They said, dollar cost averaging beats most investors, most traders. Like 99% of traders or something like that get beat by just people who dollar cost average and just don't do anything. So when I saw that, I said, okay, I'm looking at the next market and that's Bitcoin. So I said, okay, Bitcoin is the early years of Bitcoin. It's not like if you look again at the stock market, it was 1923 to 1933, 10 years of up and then down. With crypto, we are about 10, 15 years in. And if you look at again where it was and then where it's going, I think we have a very similar time ahead of us for Bitcoin and Ethereum. And again, depends on what you believe of Bitcoin or Ethereum. There's people who believe in one and not the other, vice and all kind of stuff like that. But the core is you have to do that work and decide what asset do you believe is going to go up in value, right? So this is where you have to start researching what is Bitcoin, what does it mean, why do people believe it's going to go up in value? So one second. Okay. So now I started a class around 2021 when I started to realize what was happening. And I started to look at what I was doing, and I spoke to a trader actually. And the trader taught me about this trades I forget what they call it, trade signal called the MACD. So he told me he would watch the MACD, and anytime the MACD would go up, he would sell, and anytime it go down, he would buy more. So when he told me this, I was like, "Oh, okay, let me see if I can do this." So I started to do it, right? But I did it with leverage. One second, sorry. So what the MACD is, if you can see it here, this is in 2021. The MACD is these little green lines and red lines. So if you look going back in my YouTube channel many years ago, you'll see a lot of videos of me doing this. I was doing this and making videos about it, and I started teaching a class. I started coaching clients one on one, and what happened was it worked. People would dollar cost average in, buy when the prices, I mean, sell when the prices were up and buy more when the prices are down. And what happens here, right? If you're buying when the prices are down and selling when the prices are up, you're making money, right? Because it doesn't always correlate specific, but it's a system you can follow that takes emotions out of trading, and it's pretty tried and true. So I started teaching this, and I had customers that were doing it on their own. We were all doing it by hand. Me, them, groups of people that I would teach this to. So this is 2021. The market went up. We we learned. This is when we learned the lesson about making sure you're selling and taking profits when prices are going up. So if you look, the MACD around that time is very small, but again, you if you are watching this every day, you're more zoomed in. So this was a major lesson. You got to take profits when the profits are up. That was one of the first lessons I learned, because this over here, I didn't take profits. Price fell on me, and I just watched my portfolio drop, and I got liquidated because I was playing around with leverage. Right? So but the leverage came from me deciding to bring Bitcoin and Ethereum and borrow off of them to buy more coins. And there's videos on this channel of me talking about that on my YouTube. But that was where all of this started, and I started to understand and hone this, right? But what I learned was this was the time to make money right here. Oops. In this bottom area between May and July, August, this was where you could have made the most money if you came in. Most people came in during this pump over here in from 2021, pretty much as soon as 2021 started to till the top here. Most people, that's when they brought money in. Then I saw here where the dollar cost averaging opportunity was, and again, teaching people, look, prices are falling, buy then, and when the prices are rising, sell. People made a lot of money, but again, I had many customers who did not sell at this height, and I had many um people I was coaching that started to buy in at this height, the second height of November, and in November the height was $67,000 in 2021. So this was when I realized, okay, people are just not going to do this. Even though, they were told, they were like, yeah, I'm going to do it. It's just too emotional to do. And that was when I first started thinking, I got to build a product to do this for people. So again, nobody really thought this was the end of the bull market. We thought at this point it was going to over 100K. Everybody thought that. And look, we're in November. This is November 8th. We are now in November 13th of 2025, 4 years later. And that's going to come back later on in this video. But the overall is Nobody knew the end. Nobody knew the end. Nobody. And over the next year, we look, this is November 2021. November 2021, price just fell all the entire year pretty much. And what I saw was people just believing it was going to come back, but not dollar cost averaging. Then I had certain customers that were dollar cost averaging the whole time because they didn't know what was going to happen either. But as the prices were falling, they were buying more and more and more and more and more and more and more. And the people that bought up here were just waiting for the right time to sell. This whole year was the time to accumulate and buy more. If you believed in Bitcoin and Ethereum, this was the year that you made all of your money. And you'll see. After that, I built Stack. So I said, okay, I'm going to be ready for when this comes back. And I was dollar cost averaging on my wallet, on, individual, on myself by hand. And what I learned in the first year of Stack was the laws were limiting. So I couldn't do a lot of the things I did by hand in Stack. I couldn't do the MACD thing because the MACD thing was trading. And if I created a bot that traded, it put me in a zone where I could get in trouble as a business. So I said, okay, since DCA wins anyway, what if I just made the app DCA and we will protect the loan just like when I got liquidated, I knew I could have protected it. What if we just DCA and protect the loan? And we will protect the loan at the point when we know the loan is at jeopardy. But what I realized in that full year is again, multiple customers. I have multiple customers starting to do it. Every time people brought in new USDC, meaning brought in new deposits, were dollar cost averaging, that USDC was actually protection against volatility. So, in seeing that, I was like, okay, DCA, it just keeps winning. So I said, okay, we're going to build it to do that. So this was the day I launched Stack, February 1st, 2023, right? I started building it on January and we were able to get it up in a month, which was crazy. And of course, we were testing at this time, bringing in like small amounts of customers to make sure things were right. And look, prices fell. But again, since we were dollar cost averaging, the first month was amazing. We're buying at that while the prices are falling. Then as more and more people started learning about Stack, they started bringing in money at these tops where you see like April, May, all these tops there. And I'm not sure you see my arrow, but um, at the tops, they were bringing in money. Actually, let me write on the screen. Okay, let's see if you can see this. I'm gonna use an arrow. Hold on. So if you look here, they were bringing in money. Here, they were bringing in money. Here, they were bringing in money. But people that were dollar cost averaging were buying and bringing in money at the right times. I mean, all the time. They weren't trying to time it, so they were buying in all these times. So, like this right here, didn't get many new deposits from people that weren't bringing in often. So, right here again was the time to make money with Stack. And I had people that brought in very little money once, even during this time. And they came back to great wallets. So, the problem is when you try to time it, you're pretty much most of the time operating off FOMO because you're bringing in money because you're hearing everybody talk about it, and that's because everybody's buying it. Right now, nobody's talking about. Everybody's scared to death about where Bitcoin is going. This is the time. This is the time. This is one of these times. Again, not financial advice. It could go lower, but again, more sales. If you really believe Bitcoin Ethereum is a way to get out of your financial situation, this is the time. These times like now. The fear and greed index right now is, I think, a 15. Let me actually look it up. 1 second. I'm on full screen, huh? All right. Can't even X out of this. Okay. I'm not sure if you can see this yet, but I'll stop sharing and bring it back. Read. So okay, I'm getting all right, so let me clear out all the writing. Oops. Clear it all out first. Okay, so let me make sure I'm sharing the right thing. Okay, stop sharing. And actually, what I'll do is I'll just share this screen. Got a bunch of stuff over here. Sorry, I got like thousands of windows. Okay, almost done. Hilarious. Um, okay, okay, here it is. Okay, so now I'm gonna share this screen. Okay, share. All right, so now I'm gonna show you the fear and greed index. All right. Okay, so this is again a chart people look at and to understand when is a good time to buy. And if you look, anytime the fear and greed index was down, was a good price in Bitcoin and Ethereum. Look, the fear and greed is down, prices were good. Fear and greed is down, prices were good. Fear and greed is down, prices were good. Fear and greed is down, right? So anytime you see the number of the fear and greed down, it's usually a good time to buy. And where are we right now? It's pretty down. It could go lower, sure. This is extreme fear, fear, neutral, greed, extreme greed. And anytime there's extreme greed, that's usually a time to be selling. So right now we're in this point where this is a good time. And again, you can wait to have extreme fear, but don't always get there. Look, extreme fear doesn't happen often. Look, this is over history of it showing, I guess, 1 year or I guess they started tracking it in 2023. So 2025, only time I had red. For crypto. They've done this for stocks and stuff. So if you see, we are in a time where fear and greed is low. So that probably means we're in one of these moments where the prices are low. And again, I'll use the arrow. So what does that mean for year two? This year was a learning that I was able to see. The first year I was able to see because when I had my other business where I was just coaching people, I didn't know when they were bringing in money. I just helped them whenever they needed. I didn't see when they deposited money. But then with Stack, I can see every time people deposit it. And now I had a bird's eye view of many, many people in there and what they did. And I started to see patterns. And it's like, whoa, it's pretty obvious when the prices are the highest. We get a ton of deposits. And I was like, man, I don't know how to fix this. But we got to the next year and we said, okay, what is the problem that we see right now? Because when we first built Stack, we didn't build it to take profits. Because again, based on the laws, we didn't want to create taxable events. So we would tell our customers, hey, when you see profits, you should take them. And the way to take them, you can go in the app and take your profits in expert mode. People didn't do it, right? People just didn't do it. They would see the prices go up, come down, prices go up, come down. And if you were consistent, it really didn't matter. But if you weren't consistent and you brought in money once and you more than likely brought money at the heights, prices fell on you and we had to protect your loan, and that wasn't a good experience. So the second year, we realized Volatility is awesome until the downside happens. It's awesome on the up, sucks on the down. So if you took profits on the up, just like we used to do it with the MACD, but we didn't want to do it ourselves because we were scared of the laws. But then we realized, okay, this is bad. Like people are always coming in when the prices are high. We have to start figuring out how to take profits for them. So I started talking to lawyers, figuring a bunch of stuff out. And whatever your political affiliation is, when Trump got in and he had the crypto focused group, everyone told me this is your time. This is your time to take profits for people because the Trump administration is going to allow a lot more. So I took the risk and we built the ability to take profits. And now if you're using the app, you see we take profits. When the prices are up, we take the profits. When prices fall, we buy back in. But I couldn't do that in the beginning because I was scared to death of being, subpoenaed or something like that. So what we learned though is again, dollar cost averaging was killing because the people that are dollar cost averaging, and then there was a new lesson I learned, which was you can dollar cost average for a while and your portfolio can get massive. But if you're not protecting that profit and the price falls, you can lose all your profits very quickly. Because if you got a $300,000 collateral with a $200,000 loan, and we've had people with way more than this, 500,000, $1 million worth of collateral. Let's say I'm gonna make the math easy, so I'm gonna use $1 million number. We have $1 million of assets against a $500,000 loan, right? So that's a 500K net worth. And the market goes, and let's say, again, to make the math easy, let's say you got 10 Bitcoin and Bitcoin's worth 100K. So now you got 10 Bitcoin worth 100K. And when the market goes down $20,000 and Bitcoin goes down to $80,000, which you can see happens, right? Like, okay, here, oops. You see here it went from more than 70,000 all the way down to 50,000 almost, right? So that's a 20K drop. And it happens. Look at here, from here all the way on the end of the year in February, I mean in 2025, February, it went from 106,000 to 80,000. That's a 26,000, let's say 24, $25,000 drop. So now, let's say you got 10 Bitcoin and it goes down 25%. That's $250,000 of your $500,000 net worth dropping, right? So that's if you have 1 million and it's all Bitcoin, which we also do Ethereum. So that's part of why we do Ethereum too, to create some balance. But think about that. That's half your net worth in one. This is like a month or two, right? So 25K times 10, $250,000 drop. And it could get worse when it's other, like Ethereum was even worse. I think Ethereum was at like, I forget. At one point, Ethereum was almost $4,800 and it went down to $3,000. That's a massive drop. That's like 40%, 30, 40%, something like that. So now imagine 40% drop of your full portfolio. And if you're have a loan that's more than that 50%, you got to be protected. So these were the lessons again of volatility is awesome if you take advantage of it. It sucks if you don't. So year 3, which we're almost at the end of now, which is it's insane to just go back and assess all this. Year 3, the laws changed. Trump came into office. He did a few different crypto legislations. So we felt very comfortable turning on the protection. DCA is still dominating. People that bring in often, even small numbers, they are dominating versus people who bring in once and hope for the best. So what I always tell people is better to bring in $100 a month than $1,000 one time. It's just gonna be better for you, and that's just the truth. And eventually we're gonna create a dashboard that everybody could see this for themselves because I almost feel like people just don't believe me, but it's obvious when you think about it. But I think people need to see, And then the GPL, growth protection level, we put into play where what we learned is when the market is going up, we should be protecting the health score higher because that's the way to take your profits, right? And if you think about it, before in the beginning, we weren't doing that because we were scared of the laws, but also it works when the volatility is high. It works because we're not selling to protect, and you're able to take advantage of those jumps, right? But the problem is when those big drops happen, that's when we need to protect you, and then you lost your full amount of equity. So we said we don't want people to have that experience. We want them to gain. And now we got it to the point where people are not losing their principal. They're keeping their principal. And of course, there's times where you lose a little. If you bought in at the height, there's no way. But over time, when we look at our customers that have been with us for a long time, as when we put this in, they're keeping their principal and growing their principal. That's the goal, right? It's not only about just how much Bitcoin and Ethereum I hold. It's about, do I have a higher net worth? If tomorrow I needed money, can I get money? And what we saw early on in the previous 2 years were people were bringing money, then they needed money, but the prices were down. Because everybody needs money when the prices are down. So now if my portfolio is much smaller and I need money, that's not a great position to be in. So that was where we put in the GPL. So now we're looking at where we are right now in this current cycle. And if you look again at the previous cycles, this is 2021 and this is now. This is now. It's pretty similar. It's scarily similar. It looks like it's going down, but what people say now is this is not the same anymore because now it's not people buying Bitcoin, it's banks, publicly traded companies, countries, sovereign wealth funds, 401ks are all starting to buy Bitcoin. And that can change this cycle that we've been in. But nobody knows again. And if you were just waiting for the right moment, like back here, you would have missed this opportunity. This would have been the opportunity to buy from November to March. You would have made a bunch of money buying then. And then yes, it pumped again. No, March. It pumped again. You would have made some money. Then it fell again. But this is the time to accumulate. And then when we got here, this is when the money happens. But this is years, right? This is 2 years. So if you were dollar cost averaging for 2 years, you would have made a lot of money. And I seen it. I know I have customers. I did it. I just don't know how to do anything more than what we set up now is you can set up an auto deposit. You can say $100 a month is gonna come out of my bank account. It's gonna just do it every month. I'm not even gonna look at it, not gonna think about it. Because that's how 401ks work. If you have a 401k, that's what it's doing. Every month it's taking money out of your check and investing it. And you are not even thinking about it. And then you look up in 10, 20 years and you have a retirement fund. But that only happens if you do it consistently. And then let's think about a house. You put on a down payment for a house, you pay off your mortgage over 30 years, every month for 30 years. If you put $100 into the stock market, crypto for 30 years, it's almost impossible for you not to have hundreds of thousands of dollars, if not millions. 30 years? That's insane. That's like it's insane. And if you go to a compound interest calculator, you can see that yourself. Um, and I have videos where we do that too, but I won't talk about that right now. But the truth is, you gotta build the consistency. You gotta say, I can put $50 a month. It don't gotta be the stack. It could be the stock market. It could be just Bitcoin directly. It could be just Ethereum directly. It could be Solana, XRP, whichever ones you believe in. But get to the point where you're putting in money every month, every week, whatever you can do. I know people that put in $25 a week. I know people that put $200 a month. I know people that put $5,000 a month. And that's where like this divide is getting more and more, and very little people are owning assets at all. So the sooner you start understanding what asset, whether it's Bitcoin, Ethereum, whether you use Stack or not, this is not the time to not be buying assets. If you look what's happening with AI, nobody knows what's going to happen with jobs. And if you have assets, at least you have something to use if you need money. And most people are not buying. So, all right. So now let's go back to the Bitcoin chart. This is where we are, and people believe we haven't really hit the rally yet. And some people believe we did. Nobody knows. Nobody really knows. Some people think by the end of the year we'll see 180K. Some people think we're going back down to 70K. Nobody knows. And trust me, if you knew, it's because you were creating the market. You have all the money to create and make the prices fall or rise. That's what we're seeing, a lot of manipulation from whales. That means people with lots of money creating prices rising and prices falling. And you can't play that game. You can't outtrade quadrillionaires. They can move the market whenever they want, and they do it to take money from people that think they can outtrade them. Think about it. If I know what is about to happen, how could you beat me in a trade? I'm creating the trade. You cannot outtrade these people. You have to just dollar cost average for as long as possible and you will reach it. Warren Buffett's quote, look it up. I can tell you how to be rich, you're just not going to like the answer. It's slowly. And even him, he says it. You can just put money in the S&P 500, eventually you will be rich. But if you only put in $10 a month, it's going to take you a lot longer. Even with $100 a month, depending on how old you are, that might not be enough to retire by 65. And I just posted something on Instagram where they said already 60% of people believe they're not going to be able to retire by 65. 60% of Americans already believe they can't retire by 65, no matter what age. And if you look at what's happening in other countries like France and stuff like that, they're raising the retirement age on them. They're going to do that here. People are going to have to work until the day they die. The problem is there's also AI. And I run a company, and unfortunately, I'm running an AI company. And I'm telling you right now from the inside, it's going to be very hard for humans to compete with an AI. So, and I'll just give you the quick math. It used to cost for 1 million tokens of AI usage, it used to cost $150. What that means, AI usage means putting information in and information coming out. A token is a certain number of characters and letters and words. It's not exact. It's not like 100 words. It's a weird calculation. But it means we are doing a lot within 1 million tokens. They say the human does 20,000 tokens a day on average working, something like that, 25,000 per day. 25 million tokens per day is what a human does in output in their job. If they work on a desk job with like a computer screen and a keyboard. So remember I told you it's $150 per 1 million. The average human does 25 million tokens per day. So of course, it doesn't make sense. 150 times 25, it's a massive number. Humans are better. Now it's $1 per million tokens. So what does that mean? $25 a day of token spend per human to do the same job. And yes, they're still not perfect, not great, but this is just going down and down and down. Eventually, it's going to cost pennies to do a better job than most humans do. The AI is not going to get sick. The AI's boyfriend is not going to break up with them. The AI is not going to want to take a vacation when something is due. It's just inevitable that this happens. Put yourself in a business owner's shoes. You have a business. You know you can do everything you need for less than $1 a day with less hassle, or you can hire a human for 1,000 times more money and more hassle. What do you think more people are going to do? It's just going to get to a point where either you own part of these AIs, or you hope for a universal basic income, or you have assets that you bought before all this went down. And even me making this video right now is partly because I want to create a community of people who have shared ownership in something. And I'm working towards figuring all that out. But again, the laws are not there yet to do this kind of stuff. There are laws in different ways, and I'm researching everything. But but again, the math doesn't really work well there either, right? Like if you have 1 million people using your app and you make $5 million of profit and you share that with 1 million people, that means 1 million people are going to get $5. It doesn't make sense, right? Like nobody can live off $5. This is where you have to invest. You have to invest, because even ideas like I want to do, it's not going to work for most people. There's no way. It's just the math is not going to work. And of course, we're going to have to incentivize people who are doing more so they will make more, right? So if a person just uses the app and they make $5, but another person brings in 25 people a month and invests $100,000 a month, that person is going to get more profit share than the person who puts in $5 a month, right? Like, and these are all things you think about, because the truth is the world is not built for everybody to win. And the sad thing is, that's why 1% of people own 99% of the assets, or whatever the actual stat is. There's the 1%ers and there's the 99%ers. And the 1% own most of the assets. That's why they're the 1%. And we can start buying the same assets they're buying. And that's where, come back to the stock market. We'll end it here. If we were in this same time and we see this is happening right now, let's say this is what's happening. We could be in like the 1937 time. We could be in the 1940s where the prices are down. But if you would have bought in any of these downs, you would be good. You would be good. And especially if you were consistent. So on that note, everything we're building at Stack is trying to help people be more consistent, get more money in their accounts faster, to invest more, protect the downside, and build a community of people. And I've been on calls all week with customers. I get on one-on-one calls with customers, and they give great ideas, and we're taking those ideas and implementing them as well. So that's where partly we want the community to look and tell us what they want, what questions they have, so we can make this more understandable, so they can get more out of it, and then they can invite more people, and then we can grow this company to be something that really is not going to exist unless people like us build it. Because if you take this type of company and you take the old traditional way of making it, they would never be able to do a lot of the things we've already done. And I don't mean like coding and stuff like that. I mean the way we've thought through the business and set up the business. You can't do that when you take a certain type of investor. And that's what most companies have to do to create what we've created. We haven't had to take on those investors, so we haven't had to make those decisions, which gives us a lot of flexibility. But it's still very difficult, right? So, but again, we're doing very well, and we know slowly but surely. But the more we get community engagement and more people talking and asking us questions, the faster we can build this thing. And who knows? We could be heading into a bear market. We could be heading into a bull market. But what I do know from all the years of doing this, you don't know what's going to happen. In the moment, you just don't know. It's better to set it and forget it. Set it and stack it. So on that note, that's how I'll end it. And if you have any questions about anything I'm saying, or can there's links in the description to the community. If you're in the community, ask any questions you have. We're working. We got so many cool things we're working on. Again, slowly but surely, we'll keep building stuff out and putting stuff out. Thank you if you watch this, whenever you watch this, wherever you watch this, and hope to see you in the community. Thank you. Have a good rest of your night or day.